Good morning, 6:04 a.m. Pacific Standard Time. Today's date just so happens to be what? 7/7 of 2010 at 6:04 a.m. Pacific Standard Time. We have a Google chart here. It's a daily chart. And the reason why we're showing this one in the daily form is we can see where the call option was priced at 340 back on 628. And from that level, we had a 1, 2, 3 day breakout to the highs of 1140. And yesterday we put in a low of 6.41, and we naturally had a bump off of the low to 9.110 intraday high with a $9 print. With, you know, this is this would have been the close on Friday at 972. So yesterday's action on 7/6 dropped that down there. And what I do want people to realize is that Google itself had a $10 down move. So when it fell $10 off its intraday positive high, that's what it took to get that $400 put to move. So when you have that $10 that evaporated out of the stock yesterday and went into slight negative territory, that you have the reality of that full top-down movement to populate that $641 price movement up to the 910 highs. Once again, they did get inflated when they reached that 1140 high. They got cut down to 640 yesterday. So what we're looking at is the imbalance of inflated for that particular August $400 put option. We need to continue to see where we have given out previous charts last night after the closing bell that showed the imbalance call and put ratio on the weekly charts that SMF has provided for novice individuals and other professionals. It doesn't matter what spectrum that you participate and who you are, is that what we're showing here is a pattern of inflated back to that first area of coming off of that inflated ratio coming back down. This is the August contract. We're going to be monitoring this contract. It's something that we need to be aware of. Another thing that I'm going to show is the August 450 call, which is a daily chart. And let's take a look on what date it was. It was on 6/29 when they were $30 a contract. One day later, 2 days later, 3 days later, 4 days later, including yesterday, the high was $20.20 of that August 21, 210, $450 call option that had a closing price of 17.50 on Friday before the holiday. When we opened up yesterday, Google had a big gap, so it took that down to 14.30, but then traveled $7 off of the low. Went up to the highs and the call closed in that deflated area, down 2.70 at 14.80. So once again, I've got a deflated area here. And I will be setting alarms today at if it drops to 1420, and below that will be 1580 or 1380. And we're going to continue to monitor the Google call 450 and the put option that I showed on the tape. And both have an imbalance ratio, because if I pull up another weekly chart and I show you the call, the put option, now let's go back there, $400 put, which we already showed on the video, but let's just, for the sake of it, make sure that you see that $400 put in this weekly chart here. And basically you can see the imbalance ratio of the put option going up to 1140, and at the same time here you can clearly see where that 450 call for August, which has come down to its lows. See how it lost all its premium? See how the $400 put for August went off of that 340 up to 1140, came down to 640, had that bounce as I took that premium out. Perfect risk management trade. Once again, we are looking at how inflated and deflated ratios work at wholesale prices, along with this chart right here. And the Google daily chart, you can see from a daily perspective, is that from that 500 area, we've ran straight down there. And to get back to these support levels is that you got to go back clear back to last summer. In 2009, in our uptrend, I can draw this trend line right here horizontally for you, which is not a problem. There's a gap sequence at 425. Currently, we're sitting right here where the breakout actually occurred a year ago on 7/24. We made an all-time high from that period on through the end of the year. And basically, we've come off the 2010 highs right over here to that current level. And even when we look at our current daily percent DS, which is 6.10, which indicates an oversold equity.